Hello, everyone, and welcome to today's IFA 60-minute webinar. I'm just going to obviously allow a couple seconds for people to hopefully join us, and hope everyone is well. And for those of you who don't know me, I'm Ian Hornsley. I'm one of the IFA board directors and also Eastern Region Ambassador. I'm delighted today that we have Paul Rigney and Anne Grundy join us from Vantage Fee Protect, good friends of the Institute for many years. And I know obviously we've done one or two of these sessions before over the last couple of years, but I think from an Institute point of view, it's ensuring that members are kept up to date with obviously what's happening out there with HM revenue inquiries, and what fee protection does and means for us as members in practice, particularly. Obviously, you can see on the screen, obviously bear with us if there's any sound or visual issues. Hopefully, fingers crossed, everything will go well today. And as always, obviously, whilst you can see us, we can't see you, but we would ask you to put in the chat box any questions as we go along. I think, guys, are you happy with that? Because I think it's important that if somebody's got a question, you ask it at the appropriate time. And that, I think, evolves the session for us to all get involved and be part of what it all means. So, Paul Rigney, Paul, you've worked in the tax arena for your whole career.
Yes.
And obviously, I've known Paul for many years from different companies around the fee protection circuit. Can I say that? But as you can see in front of you, I don't need to repeat what that says. And I'm sure many of you have met Paul before. Anne, however, obviously comes and joins these sessions. And Anne, obviously, again, has been in fee protection for quite a long time. Anne is obviously head of claims at Vantage. So if you are a Vantage customer, client of joining Vantage, then Anne is the one that deals with claims. And can I just say, from my point of view, from my practice, the service is excellent. And this is about making sure we are supported as members in practice where we use fee protection, but also have that, and I say, shoulder to cry on, and assistance and support when we're dealing with a tax inquiry. And I think that's important. It's bad enough that a client gets a tax inquiry, but it's also about how we have to spend our time and deal with that, and how fee protection covers some of that cost. But I'm sure the guys will explain more in due course when we get the session underway. Obviously, we are recording today's session, so for those that can't make this today, then that will be available as always. And I'd like to just go on to upcoming CPD, if possible. That's it. Again, just a reminder, because obviously, hopefully the session will go for the full hour, and I say it's important that members do ask questions along the way. But upcoming CPD, again, it's all on the website for members, but lots going on, which is great. I think, from an offering that for us as members, the Institute is trying to obviously provide us with great CPD. And again, the list is there. Obviously, a few AML matters. We've got the AML conference also, 21st of May. And of course, we've got the main IFA conference in London on the 25th of June. Again, if you haven't signed up already, it's well worth going to. Obviously, CPD is earned as well. And in between all that, we've got another tax session. I know they're very popular, payroll, and of course, the regional events that have kick-started this year back in February. I know, obviously, from a Eastern Region and London point of view, I may have met some of you at those. Again, please do support the region's meetings. It's very important, I think, for us as members to meet each other. Online is great, but obviously it's finding that balance between online and in person, and meeting other members, other professionals, but gaining CPD as well. So if you haven't got that list, then please go to the website and further details can be obtained. But I'm going to hand over to our guests today, to Paul and Anne. I will assist and take questions as we go along. So over to you guys.
Thanks, Ian. Can you see the screen I put up there now, Ian?
Yes.
Brilliant. Okay. So, hi everyone. Welcome to the session. We're going to have a quick sort of walkthrough what the revenue are up to at the moment, what we're seeing as a business in terms of the type of claims and inquiries that are coming through to our team, and just trying to understand a little bit about the changing working practice that the revenue are applying at the moment, and the way forward, the sort of not disappearance of, but the reduced reliance on the traditional type of inquiry, and more of a focus on the inquiries that are being driven by data and use of AI as a more cost-effective and simpler way of delivering the additional tax funds that the government obviously are pursuing at the moment. So sorry, let me just see if this is not, there we go. So we all know revenue activity is sort of being driven now by the political agenda, the black hole in the Treasury. We've seen the announcements last week from the Shadow Chancellor with regards to their plans for an additional £500 million of resource into revenue to deliver yet another £5 billion of tax gap. All well and good. Not sure where that additional resource is coming from. Not sure they understand just how long it takes to train somebody to arrive at that position. Don't know if any of you have seen, but Revenue and Customs are advertising for positions within the department, targeting tax professionals working in practice. So quite a reverse. It always used to be the practices that went after revenue staff. It's turned now where the revenue are looking for CTA qualified tax professionals in practice, and turning the tables. So there is an agenda to recruit tax trained staff. How those people would ultimately survive in the revenue and that institutionalized government department, who knows? But it's starting, and they are targeting and driving that agenda forward. Okay, so Revenue and Customs have all been given their targets. The tax gap is believed to be £36 billion. So that is what the Treasury wants to see. That is where the target is to recover. And we all know at the moment they haven't the resources to deliver it, not with traditional inquiries and not with the manpower they have available to them. So they've got to be smarter, got to work more efficiently, and start working a completely different way. And we're seeing that already. So better targeting via Connect, more targeted campaigns rather than just scattergun approaches. We're seeing more of revenues persistence in inquiries and an unwillingness to walk away without a result. We're certainly seeing that through our claims department and the additional time costs and things we're seeing as a result of that. And what will be a growing penalty regime, especially with the introduction of MTD in 2026. Connect. I always seem to be talking about Connect these days. It's been one of the most successful investments HMRC have ever made into a piece of software, developed by British Aerospace back in the day. It is now reported to have over 80 billion lines of data. An amazing silo of information. And it continues to grow on a daily basis. HMRC have the duty to observe, monitor, record, and retain any internet data which is available to anyone. So if you're talking about GDPR issues and how can they hold all that data and information, as long as it's what is called open source material, then the revenue have no issue in storing that data down. So that could be information they glean from news reports, internet sites, Companies House, land registry reports, and blogs and social networking sites where no privacy settings have been applied. So really useful source of information. So if you've got a client who gets a full inquiry and sits in front of a tax inspector and answers the question where I've been on holiday in the last 12 months and he says Skegness for a week, chances are, if he's posted on Facebook or any of these sort of places, pictures of him and his family in Barbados, chances are the revenue will have that information, especially if privacy settings haven't been applied. And we've seen that in some inquiries. So a lot of a bigger world. Sorry, Ian, you were going to say something?
No, just absolutely. Facebook is a great source for the inland revenue, whether it be just onlining that you've got a little pop-up shop to cleaning cars to going on holiday to Barbados. They certainly love Facebook. Yeah.
Do you think, guys, if I may, that really, I mean, when I see a new client or we even engage with clients on an annual, or if I don't speak to clients all the time, that it's important that we get this message over, because I think this is about educating, not just educating us. This is about educating the clients as well.
Absolutely, yes, definitely, Ian. It is something that you need to bring up as part of your conversation with them, even if it's only when you see them to sign their tax return, because I'm sure you all put checklists in and say, right, you've given us this information. Have you thought about all the other bits and pieces? Have you got anything else? And yeah, information from social media is something that you ought to be highlighting to them, that not only have you got the risks when you go on holiday to Barbados, that the world and his wife know that you're actually away from the house for 2 weeks if they know where you live. However, it's not just that, it's the fact that the Inland Revenue will be picking up that information. And as Paul says, we've actually had 2 cases that I can think of where they've been caught out because the clients have tried to say not quite Skegness, but equally not that far away, and they've been on luxury cruises.
Yeah, I mean,
which it doesn't help.
We all live our life,
especially when they're trying to argue cash takings.
Yeah, we all live our lives on social media now. We have a new car, first thing we do, we flash it on social media, etc., etc. Just make sure that you advise your clients that the privacy settings are set correctly on all this social media stuff, and at least put some protection in place. Otherwise, chances are it may well trigger an investigation, because what the inspector's seeing out there in terms of lifestyle or various other areas, it doesn't tie into the accounts and returns that have previously been submitted. So just be wary of it. It's just the new way forward. Back in my time in the revenue, the inspector might have read the social pages of the local newspaper to try and find out what was happening out there. Well, he doesn't need to do that anymore. So what does it hold? What does Connect hold? Social media posts, obviously. Merchant acquirers. Revenue are asking providers of electronic payment systems, card readers, to provide information of transactions that are going through businesses. Again, those are full and detailed reports of exactly what that business is doing and how it's trading and who it's trading with. So again, this information would have been very difficult for the revenue to get hold of, but now it's a simple information request and the card providers need to supply that information. banks and building societies. Again, that information has always been provided to the revenue in terms of interest payments, etc. But it might have taken 12, 18 months for that information to reach a taxpayer's file. Now it reaches it in seconds. Tax evasion hotline. It may be a bit old-fashioned, the whistleblowing piece now, but the revenue still on a daily basis receive information for whistleblowers with regards to taxpayers from aggrieved parties, whether that's somebody who's done work for that it hasn't been done to their satisfaction, somebody who just suffers from envy, whatever the reason, a divorced wife, it can be any area, but that whistleblowing still continues, and the revenue will follow up every area around that.
I was going to say, Paul, sorry for butting in, but
No,
most of our national minimum wage, stroke living wage, national living wage inquiries come from aggrieved ex-employees. Most of them, and you can see when they issue the letters, the first letter is, "Oh, can we go to a meeting?" But then when they drill down, you can guarantee that they will ask for maybe half a dozen, depending on the size of the company, maybe half a dozen people, maybe 20 people. But you can guarantee in that list, you will be able to pick at least 2, if not 3 people that have left under a little bit of a cloud every single time.
And it's going to continue to grow. It's so much easier now to whistleblow. You can go to the hotline and just do it. You don't have to write a letter and send a letter in. It's just so simple now. One of the biggest areas the revenue find easy to gather information is property-based information, whether that's from land registry, when any property is sold, purchased, letting agents, information requests to estate agents, provide us with a list of all landlords on whose behalf you manage property, give us details of the rents received and collected. Mortgage applications. Again, banks and building societies are obliged, if the information request goes in, to provide details of those mortgage applications. So what's the income being declared on those application forms? Does it tie in with the returns and accounts submitted? Again, all just simple, easy way of cross-referencing and checking. And of course, foreign data under the new worldwide agreements, details of any income, interest, etc. from banks across the world now get provided through to HM Revenue and Customs. So it's a data-driven world. We know that. So there's no reason why we can't expect that the revenue haven't joined that party and are using that data in a very efficient and cost-effective way. So how's this data being used? Campaigns, and we've seen all those campaigns being driven and put out through, again, through social media, again, through TV advertising, newspaper articles. The task force that have been set up to follow up on those campaigns. The normal investigations, we're still seeing the traditional full inquiry, aspect inquiry, etc., VAT, pay-as-you-earn, and compliance visits, all those are usual. Criminal prosecutions, it was very rare for the HMRC to pursue criminal prosecutions. It was always seen to be the last resort. If at all possible, they would always look to drive inquiries and settle inquiries through a civil procedure. That's changing. The number of criminal prosecutions year on year carried out by Revenue Customs continues to increase. So they will use that now. It isn't a matter of last resort. If they feel in any way, shape or form there is criminal behaviour, they will pursue a criminal route. And information that is being gathered is shared with other government agencies. Each government agency talks to one another and stores that data and information. I've probably said this before. I don't know if you've noticed that anytime you probably fill in a government form, no matter what it's for, you'll be asked for your national insurance number. And the easiest way for any data to be linked to your personal record is through your national insurance number. So yeah, Big Brother is watching. Just looking at some of the campaigns, those are some of the numbers of the tax that has been collected in the millions over those various campaigns in the last sort of 5-10 years time. So each one they've done has always been extremely successful in achieving its aim. There'll be more campaigns coming through. The way the target campaigns is going to change, and we'll come to that as we just carry on through the presentation. Task forces are, I don't know, I suppose if you watch Blue Lights, the sneaky beakies, they're the ones that are going out there and sort of using data to drive their activity, and rather than this just a scattergun approach, they're going into geographical based areas. They're using multidisciplinary teams. So the guys that are going out and working in teams will have a CT background. Some will have a pay as you earn, some will have a VAT, and some will have an income tax. And when they come out and do a visit, they'll be looking at everything across all of those taxes. Not like the old days where an inspector would look at corporation tax, and if he thought there was a VAT issue, he would then send a document across to the VAT team and said, you might want to look at this. This will all be dealt with as one cross-tax inquiry as part of this tax force activity. What are they looking at? Well, transport, hotels, restaurants, hidden wealth, to name but a few, some high net worth inquiries as well. Traditional cash-based industries, we've seen scrap metal as well, where the revenue have always believed there has been under declaration of income. Some of these announced visits will be unannounced. If they deem the business is been behaving sufficiently badly, they will come with an unannounced visit and potentially with a warrant to enter. And the officers will come in and look to take all information possible to take, including downloading stuff with USB sticks and getting it all off your online accounting system, whether that's Xero, QuickBooks, whatever. And they basically use what they call a business review aid memoir. So it's a templated action worksheet which they follow through to tick every box to ensure they've covered every area that they believe. So it's not done without some thought and process as part of the visit. If one of your clients gets one of these, then obviously they're going to go into panic mode. They're going to, think the world's coming to an end potentially. Key instruction to them, advice to them is don't panic. Always ask why the visit is required and has it been necessary on an unannounced basis. They need to respond to that. They need to tell you why and why it's being carried out in the way it is. Important that you check the identity cards of the visiting officers against the names shown on the notice of inspection that is required for an unannounced visit, because if the names don't tie up, you don't need to admit them onto premises. Establish whether that notice has been issued by a tax tribunal or not. If it has, then you really know that you have got a serious issue at hand here, because a lot of work will have been done prior to that visit. Decide whether, on the basis of the questions you've asked, whether to allow entry onto the business premises. And if the visit does go ahead, ensure that any information, documents, etc., taken by the revenue are recorded, detailed, and you ask for a copy of the completed business review aid memoir that should give full details of how that visit has been carried out, what has been taken, and what the next step in that visit will be.
Paul, can I just come in? Because I think it's important that I think obviously most clients, obviously, if that happened to them, the first thing they would do is ring their accountant.
Yeah.
So I think it's important that for us in practice that we do understand the rights of HMRC and the checking of the ID, etc. Because I know there's been quite a lot recently, hasn't there? Especially in the world we live with scams and ID fraud, that there has been a lot of letters, contacts being made, and I think every client and even every accountant is probably suspicious of when people turn up.
Yeah, always check. I mean, at the end of the day, you know, if you've got the identification card, if you want to, if these guys are genuine, they should be able to give you a number to ring as part of the team to go away and check and make sure that it is what it is. But as with everything in these things, you know, again, advise your client if this should happen to them. The first thing they need to do is pick up the phone, speak to you guys, and then in most cases, you can obviously get out there, attend the meeting if required, and actually, you know, ensure that the revenue conduct themselves within the law and professionally, and not in a way that threatens or, you know, intimidates your clients. You know, it is intimidating, but it should be done professionally with respect for your clients at the end of the day. And, you know, if you're there, that will probably ensure that it happens. And if it doesn't, and your client thinks that the behavior was inappropriate, then it needs noting, recording, and submitting to HMRC as the inquiry progresses. Some interesting stats here from the revenues audited report. We all know what the tax gap is, and we all, you know, understand it to be this wonderful £36 billion figure. The scary bit, I suppose, for you guys to some extent is that the revenue believe that small businesses, your target client base as IFA members, represent more than 95% of businesses in the UK. But if you actually look at that mid-sized businesses within there, sort of, again, so your target audience, they believe that they account for the biggest part of the tax gap as a single category. You know, revenue believe that there is £5 billion sat in the SME market of tax gap. And if we look at your traditional client base, I would say that puts a lot of your clients at risk of inquiry, because the revenue believe there is a large sum of unpaid tax sitting within that arena, and it's probably the easiest sector within the marketplace to target, or that will be the perception. So don't sit there and think, oh, my clients are small, won't interest revenue in any way, shape or form. The revenue believe that there's a chunk of money to be collected from just that target audience. So be wary. They will likely to come knocking on your client's door through either a campaign or, you know, information received. I'm going to let Mrs. Grundy talk about this one. So this is this slide shows the number of claims and the average claims we have received, the cost of those registered in the 23 insurance year. So Anne, I'll just let you have a quick talk through
yeah,
that.
Absolutely. So this we produce on a quarterly basis for our sales team, just to give them some ideas as to exactly what sort of the average costs are per the claim. Now, this is taking all claims, whether they're open or closed, what we've paid out, what we estimate it to be, and averaging it out across the year. If you take the 23 year, any true policy year goes over a 2-year period. Okay, so each policy year will start, in our case, always starts as of the 1st of January 23, but it could still be a policy for a 2-year period if it was written on the 31st of December 23. It goes over a 2-year period. So we're always looking at never just 12 months, if that makes sense. But this is basically the first 12 months of the 23 year, because this is the first couple of months you don't get any claims normally, and then because they're still on the 22 year, and then they turn into the 23 claims year. So you can see that the average cost for a cross tax, we are estimating it to be £7,100. That is based on 20 cross tax inquiries in this year. Okay. Now this goes from our very smallest clients to our very largest clients. So there is obviously differentials in charge out rates, but that is taken into the mix when you do the average. The year before, we actually only had 12 full inquiry cross tax inquiries for the 22 period. The 22 period's now closed. Okay. There will be one or two that pop through because people forget to put late claims in, but generally speaking, you can see that claims are actually on the rise. From 1 year to the next, the 21 year finish that we had about 824 claims registered over the full 2 year period. 22 has ended up at 1,250. We are already up to 1,100 in the 23 year, and we've still got a year to go.
I think if you look at those figures, Anne, that we've got there from the accountant's perspective, that sort of shows the average fee cost we're paying to deal with an actual inquiries that we're seeing at the moment. So if you actually have a look at that and you think, okay, so what we've got an IT aspect inquiry there, the ITA, an average cost of dealing with an IT aspect inquiry now is £2,174. Now, I suppose the question is, if you don't have fee protection in place and your clients are having IT aspect inquiries, are you invoicing client for that cost, or are you writing that cost off? Simple aspects, £488. Those tend to be nudge letters. We'll talk about those shortly. But again, VAT, the average cost of a VAT inquiry to is £1,650. Dealing with a VAT repayment claim, which again has obviously been a target market for revenue recently, we're paying out an average £986 to practices we've covered with us who are dealing with VAT repayment inquiries on behalf of clients. So, you know, there's some good numbers on there based on hours and charge out rate to arrive at those average costs. But you can see from that potentially the benefit of having a fee protection scheme in place, because the question to ask yourselves are, when I've had those types of inquiries, have I recovered that type of fee income, if any?
And I guess mainly we often see the smaller end of the accountancy scale, Paul, where they do fixed fees for their clients. And those fixed fees, the client thinks that covers absolutely everything that might happen in that year. And in reality, you know, it really probably covers the accounts and the preparation of the tax return and submission thereof, not if the inspector decides that they want to look at student loans, for argument's sake. And, you know, the client has forgotten to tell you that there's a student loan that they've been repaying, or they should have been repaying, or, you know, or they've got a VAT repayment and they think that it's an automatic given, that, you know, the £6,500 that the taxman owes them is going to come back to them straight away. It's not. And therefore, they don't suddenly like the idea that you're going to be charging them extra money.
And I think if I can come in, guys, you know, I think that's the important message here, that for those that have joined us today, whether you have fee protection or if you don't, it's about understanding what's available. This is not, let's say, a sales job. This is about supporting us in practice. And I'm aware that some members do fixed fees, and it becomes, I think the discussion with the client becomes more awkward when you have to deal with an inquiry. And I think, you know, and I've had it before where clients will go, well, that's all right, Ian, you've already done the work, so you just got to send them what you've done. But you know, and I know that the revenue wants the ins and outs of everything. And funny enough, we have, and probably knows this, we have a VAT repayment claim going on at the moment for a new registration. It was a required registration that went over the limit. And unfortunately, and I'll probably pass this back to you, Anne, that we are experiencing, and this is not us knocking the revenue at all, but unfortunately, we are coming across officers who are not experienced in dealing with information being sent to them. And of course, and I suppose the fundamental thing here is it's about our time. You know, I'm always the first one as an accountant in practice to say I run a business. I'm in it to make money, and I'm in it to make sure I look after my clients. So it's finding that balance of how much time you want to put to looking after a client and how much that client can pay you to do that, to actually having people around you like Vantage who can support you in dealing with these matters. But can I pass that back to you, Anne, about what you're seeing?
Yeah, absolutely. So especially on the VAT repayment, okay, you fill in your client's VAT return, or they complete their own VAT return. It doesn't make any difference to us, as long as you're the acting agent, okay? And there's a VAT repayment, and it doesn't matter. It used to be over 4 figures. It's now any repayment. They will issue, especially if it's the first registration, they will issue a G1 form, they're called. And if you don't fill it in to the letter, and you don't necessarily have to, because you know what the answers are if you're filling it in on behalf of the client. But one of the queries that you've got on the particular case, this is now the second round of correspondence following the completion of that G1 form. Now, sometimes the G1 form is enough, and they go, "Thank you very much, here's your repayment." The particular inspector that you've got, or should I say revenue officer, I wouldn't even call them an inspector of that caliber, but he's asking absolutely ridiculous questions, and I mean ridiculous questions. And it's because when the G1 form was completed, although you gave perfectly adequate answers, because it's not in the format that he so needs. Honestly, I've never seen such ridiculous questions come back from a second letter. I really haven't. I dealt with it this morning, actually. That's how I'm so fresh with it, because it was literally, I'm literally reading the letter going, really? You really need that to be able to give this client their repayment? And the trouble is, when they're issuing letters and you're having to go back, you're always conscious of that client who could probably do with that money influx that they've had to pay out, and that they're due to get back. So it is that you need to be getting on with it, and it needs to be prompt. So you've got to it's almost like drop everything to make sure that client gets their VAT repayments.
Yeah, absolutely, and I think the message to all the members with us today is, you know, obviously any inquiry, any letter, you know, is on top of your normal day job. You know, you try and estimate what might happen, but I think most of our members here today will say to you, as I would, that, you know, I'm at my weeks and I know what I'm doing and what my you know, deadlines are. But actually, then a letter comes along and you think, oh, right. I better deal with that as well. So,
and not only have you got that to deal with, but you've got a very upset or very nervous or worried client. You and I might sit there and go, well, there's nothing to worry about. They're simple questions. Yes, we can get them sorted. But to the client, it's almost like life and death. Right. So you'll have some clients, and this will go for everybody that's joined us today, all the participants. I can guarantee you've got at least one, if not half a dozen, if not even more clients that, you know, as soon as a letter hits their doorstep, you won't have even taken your coat off and they're already on the phone to you.
Yes.
Yeah.
And expecting to know the answers. You may not have even had the piece of paper yet. And you're you know, they're always, to them, it's a matter of life, you know,
Yeah,
life
absolutely.
and death.
It's
You know,
everything to them,
it's
whereas we've
everything
got to
to
fit
them.
it into our normal sort of workload. So I'm
Yeah.
just conscious of time, guys. So shall we press on, Paul? So,
Yeah, that's fine. I think that just sort of to finish off on that, any client of yours who is looking to receive a tax repayment, the revenue don't want to repay tax for period full stop at the moment, and any repayment claim, whether it's VAT, income tax, corporation tax, whatever, is likely to be inquired into.
Absolutely. Bad debt relief,
yeah,
but is definitely on there. Anything that it creates a repayment pool, you're quite right, you can guarantee there will be a letter come out.
Yeah. Okay, so looking at the future and where we're at, HMRC believe that carrying out tax investigations after the event, sometimes up to 18 months after the end of the accounting period, is not very efficient and certainly isn't the way forward. It's time consuming for them, it's time consuming for us, or you as accountants, and it doesn't always deliver the right result. So MTD 2026, is this going to be the year it actually happens? I'll say yes. I've said yes to 2024, been proved wrong. I'm going to say yes to 2026. And the aim of MTD is to enable HMRC to carry out inquiries in greater detail using information they already hold in year, not waiting until you file an account, a set of returns 12, 18 months after the transaction actually occurred. And they believe that this is going to enable them to carry out work more efficiently, and more importantly, with cost savings and improved yield. I'll go through that in a second. This again is pulled from the HMRC report, detailing what they believe their role as a tax collector and tax assessor is, and what they hope to achieve and why MTD is so important to them. So they believe that a well-designed system prevents non-compliance before it can occur. It's all about compliance. It's all about client training. It's all about reducing the areas where they believe risk can occur. I'm not going to go through that word for word. It's there. I'm just going to let you have a look at it. This again is tied into Connect, and it's tied into how they use that data. And I'm all sure that pretty much everybody on this call, one of the clients will have received a nudge letter or a one too many letter, whatever you want to call them. And basically that letter has been generated by data held in Connect. So Connect produces a report of all, let's say, landlords in the UK. That report is then given to another piece of software that then goes ahead and issues template letters to all those clients named on that report. So your client potentially is going to get a letter that says, thank you for your tax return. We have information that may suggest that the return is incomplete. You may wish to reconsider it. First thing your client is going to do is pick up the phone to you and go, what's this all about? You're going to have a chat and say you need to consider the return. Is there anything that's been omitted? Is there anything that hasn't been fully declared? You'll have that conversation. Worst case scenario, your client's going to say, yeah, should have told you about that property, that flat I've been renting. Sorry. You're going to advise your client that he needs to submit details of that to the revenue. You're going to repair the returns. The software is going to calculate the additional tax due and the interest payable on late payment of that tax. And your client is going to make the payment. At that point in time, the revenue has achieved all that without anybody in their department getting their hands dirty. Nobody's done anything. They've collected the additional correct amount of tax due with no trained staff, with no qualified inspector, without issuing a 9A or a 12A notice. They've done that for the cost of a postage stamp. And that is the way the revenue are moving forward. If your client doesn't respond to that nudge letter, then of course the revenue will issue a 9A notice and do it down the formal route. And a qualified member of staff will pick it up and run with that inquiry. But if that's the route your client chooses to take, then the revenue will still get the additional tax and interest payable, but they'll also get a penalty, and a higher penalty, because your client obviously failed to comply when they had the opportunity to do so.
And also, Paul, it also creates the opportunity for them to look at the whole of the return and not just per se the property income. So what else? And unfortunately, the revenue always go down the, well, what else haven't you told us, right?
Yeah, and don't forget, any voluntary disclosure that your client makes, whether he thinks it's on rental income, overseas income, whatever, any voluntary disclosure your client makes, it is a requirement that it is a full disclosure of every area of taxation, not just the one they think they want to come clean about. And if that disclosure that made isn't full, and the revenue later discover that it wasn't, even though it was a voluntary disclosure, the additional penalties and effect of that will be quite serious. So, you know, it's becoming a brave new world for the revenue out there. The building
also,
system,
Paul, I think there's also a situation where, and I've certainly had it, where clients have received a nudge letter, particularly relating to foreign income, where there is no cross-checking carried out before that letter's sent. It has literally come out of the machine.
Yeah.
And clients tend to panic. But in certain circumstances, you know, the client has already declared that income. But again, you still have to go through the process of replying to make sure the revenue can cross-reference it.
Yeah, and the revenue will, you know, some of these letters that are issued will be wrong. The information that the revenue think they're holding about your client will have been incorrectly linked to their file, because somebody might not have recorded an NI number correctly, or the address is wrong. There'll be reasons why that information has been incorrectly linked. But what we're seeing is that percentage is very, very small against the much wider picture of success the revenue are having by, you know, going down this route.
And each client always thinks they're being picked on, but actually it's all landlords. It's everybody that's come across the across the desk of that campaign or that nudge letter scenario, isn't it? It's not just your client. That's the thing. Albeit that clients always think it's just them.
Yeah. The revenue regularly now risk assess 1 million tax returns a year, 1 million SA returns, self-assessment returns a year. So of the 9 million that are submitted, they're using AI to risk assess over 1 million SA returns a year. If your client, or you in some cases, are using the revenue software to submit returns, you're going online and using the revenue software to submit returns, you'll see the digital prompts appearing. So when you're completing that return, the digital prompt will come up and say, are you sure this number is correct? Because the percentage of, say, repairs and renewals against the rental income being declared doesn't look right, and these prompts will appear. And if those prompts are appearing when the return is submitted and it still looks out of kilter, that will just be set as a task for somebody to pick up as an inquiry and run with. Future, everybody sort of says there isn't much happening in tax at the moment. There's no real headline news, but there's a lot going on in the background, whether that is the revenue's increasing use of AI and data collection, whether that is the move to NTD and the changes that will have, whether it is the regulation of the tax market and the look of controlling who works within that tax arena moving forward. There's a lot going on. and it's a lot more dangerous world out there in terms of tax compliance. The tax code is enormous, and the chances of getting it right, you know, we all know is slim. We'll all make genuine, innocent mistakes in the way we treat something in a return or in accounts, and there'll be no deliberate action involved in that. But it doesn't stop the revenue looking. The revenue have got tools at their disposal now to make it more efficient and easy for them to look. So your clients are at greater risk of inquiry than ever before. And it might not be a formal 9A notice. It might only be a nudge letter. It could just be a Schedule 36 information request. But those tools that the revenue have are being used more and more efficiently as time goes on. So I would say that if you don't have a tax fee protection scheme in place, it's probably a good time to stop, consider, look to have a conversation, see how that could work within you as a practice to not only protect your income in the event of an inquiry arising, but to potentially give you an additional income stream as well. And to give you access to the technical tax and VAT advice lines, and for your client to gain access to the employment law and safety general legal advice lines. So as a package, it is something that can add greatly to your standard service offering to clients, whilst providing you and your client with protection and generating some additional income for you. So I think it's important at the moment. I know that's the salesy pitch, but 8 years with revenue, 25 in practice, and 17 years in fee protection. Trust me, it is becoming a lot more dangerous world out there, and I think ostensibly you need to take some reasonable steps to protect yourselves and your clients when revenue come knocking. Final slide. If you've already had a fee protection scheme already, it's not with Vantage, don't feel that you need to be chained to your current provider. Last year we won just over 350 new accountancy practices to fee protection, and over 275 of those changed provider. It's simple and easy to do. Give it serious consideration. It's got to be for the right reasons. It's got to be for an improved policy. It's got to be for better support services, and it's got to be for the right premium. But if you don't have the conversation, you don't know whether or not you could improve your position. I think that's about me done, Ian.
Thanks, guys. I mean, it's really interesting, and I think from my point of view, I went many years without having fee protection. Would I be without it now? No, I wouldn't. But I think the main point here is also not only what we said earlier about having that comfort that fees can get paid as long as it's a legitimate claim, and you haven't got to have that discussion with your client if you have an all-client facility, but there's also other ways of doing per client cover. And I think actually it's good practice for accountants to have it. And I especially believe that it's all right for me saying, oh, well, I've got my colleague next door or my other colleagues here in my firm to have that discussion with, but actually ringing the helpline and speaking to the guys to just get an independent view on a tax question is worth every penny, because I think sometimes we have to admit we don't know it all. We certainly don't, and actually just getting somebody to say, yes, Ian, yeah, that's right. You've got that right, Ian. Or no, have you looked at this? And I think that's the important thing. So obviously the chat box available, guys, for any questions for Paul or Anne. I think please to enter in. Yes, so I think the recording can be sent to you. We have on the Institute with us today, although you can't see her. So she will take your details and that'd be fine. I mean, it'd be interesting just for the final 5 minutes, if we can, from members that are here today to see what inquiries they are dealing with at the moment, and whether that's all aspects VAT, POE. Like Anne said right at the beginning, you know, obviously it's even national living wage. It's all dealt with by the revenue, student loans. It's all those unusual ones, Anne, isn't it, that come along.
We have everything from national minimum wage to CIS checks, from IHT to R&D to just the normal, I call them normal run-of-the-mill income tax aspects, income tax full, corporation tax aspects full. We've got the cross taxes. Cross taxes are definitely on the march upwards because it's just the easiest way, especially your larger, smaller firms, if that makes sense. They will go after them. You know, if they're multifaceted, they will get that. They just go after them. They always find that they'll find something along the way. And the idea is, once you've got fee protection, obviously, yes, you've got the advice lines, but all the staff that are at Vantage, most certainly, have all been in fee protection for quite a long while. And we give guidance, especially to the smaller members and the smaller accountants. We'll give them advice because sometimes you get lost in the argument, and we sometimes go, no, look, have you tried doing that? I know that you and I had a claim previously, didn't you? And in the end, I was like, no, look, try this way, because this inspector is not moving for love nor money, for want of a better.
Yeah, no, absolutely, and I think you're right. I mean, basically, the other thing that members should be aware of that is, don't be frightened of HMRC.
Absolutely,
because they don't get it right all the time, and be there for your clients and make sure that the revenue don't cross a line, because they will request information or ask questions that are not absolutely appropriate, because it's fishing for information. Is that right, Anne?
Absolutely. Yeah. No, if the old adage, if it used to be an aspect inquiry, that's exactly what it is. And it should be aspects of the questions they originally ask. They are very clever at going off on a tangent, and you need to pull them back up and go, actually, you didn't ask for that. Or halfway down, they give them some information. You give them some information, and somebody thinks, oh, well, what about?
Yeah.
And then they go off and they try to get you to give that information. No.
Yeah.
What's that got to do with?
Absolutely. So I think what we've got is, the message we're getting over to everybody is, you know, we have to be professional. We need to protect our clients, help our clients. Obviously, you know, we need to deal with the revenue. They're doing the job no different to we're doing it, but we need to be aware of what they can and what they can't ask, and also appropriate time limits as well of when they can ask, and whether they're out of time, etc. So there's lots to learn and understand and to keep abreast to, isn't there? So
and equally, and make sure that you're getting paid for that work as well, and you're not writing it off. You know, there's nothing worse than sitting there and having a really good job, doing a really good job for a client and then feeling that you can't actually charge them.
And I think, to be fair, that I just obviously looking at time, but you know, I've been running my firm for nearly 30 years. I'm sure some of the people with us today, and clients are clients, and unfortunately, sometimes, you know, you don't always get thanked after the event. You know, they have short-term memories, and you know, you can go all your way and look after a client and not charge, etc. But to be fair, they won't remember that. So I'm just conscious, obviously, time is in. There's no other questions. We've had a good number of people join us today, so I hope everybody has enjoyed the discussion. As I said at the beginning, obviously Vantage is a strategic partner of the Institute. There are other fee protection providers around, but I know if you do contact the guys, they'll be happy to have a no commitment discussion, Paul, wouldn't you? That if anybody wants to find out more information, so please do make contact. Obviously, I reminded you at the beginning of the various webinars and conferences that we have going. So obviously do check the IFA website. It is important that we all keep our CPD up to date. Like always, I'm talking to the converted because those of you that are here today are doing your CPD. It's all the others that don't, especially those that sign up and never attend the event. But unfortunately, that's where we are. So any questions after, if you think of anything, please do drop one of us a line. When the slides come out, I'm sure our contact details will be available. But have a great rest of the day. Paul, and as always, thank you so much. You say the way you talk and way you say it is about at the level we need it to be, basically. So thank you so much for your time. So
no, and we'll be joining you at the conference in June in London here.
Excellent. Well, I look forward to seeing you. So thanks, and thank you, everyone. And now back to some work.
Take care, everybody.
Revenue letters. So, okay, thanks, guys, and thanks, Hayley, in the background. So,
bye.
Okay, thank you. Bye-bye.
Bye.